Now, Apple's earnings out after the close. The maker of Macintosh computers, iPod, and iPhones reported third-quarter profit that exceeded analyst estimates. Larry Haverty is an associate portfolio manager with GAMCO Investors. The firm currently holds 168,000 shares of Apple, and he joins us now from Boston with his reaction. Larry, I got to say, you know, the first thing that struck me was that the guidance was much lower than the street expected, and I pointed that out, and then a viewer wrote in, kind of, shame on you, Matt. You should know that Apple always lowballs guidance, and that is true. When you think back, they do.
I think the guidance is killing the audience at Comedy Central. You should just not take it very seriously. I think you have to go up 40,000 feet here. This company has tripled earnings in 3 years. That's really pretty remarkable. In this quarter, it brought down to EBITDA about 45% of incremental cash flow, converted revenue to incremental cash flow. The lower interest that it gets on its $30+ billion of cash, which grew in the neighborhood of $7 billion since the end of the last fiscal year, basically earned 4 cents less. So this business is firing on all cylinders. And if you look at it conceptually, it's three things in one, and it's a really, really dynamite combination. The first is it's technologically innovative. The products that it's selling really didn't exist a few years ago. The second thing is it has tremendous streams of recurring revenue. And if you're a consumer person like me rather than a technology person, that's the kind of thing that supports very, very high multiples. And Apple's multiple is not very high in relation to its recurring revenue. And the third thing is it's the best retailer on the planet. It has higher sales per square foot, higher margins, and probably better customer service than any retailer in this country or anywhere else. And all of these three things in one stock. So sit back, take a deep breath. This is a long-term investment.
Well, Larry, this is Courtney Donahoe.
Hi, Courtney.
Apple's been, they've been cutting their prices of MacBooks. They've been cutting their prices of iPhones. But it's also getting more expensive to make a lot of these products. How will these weigh on their margins? That's something that we've got to focus on, though.
Well, 35 years ago, when I was in the Navy, I bought an electronic computer for $830, and it added, subtracted, multiplied, and divided, and now that's $2. Prices go down in technology. The demand has proven over time to be elastic. This company has controlled the price declines in a very relentless manner, and it also, when it's cutting its prices, remember, it's reducing the attractiveness of venture capital to try to compete against it. And that's the thing that really kills technology companies, is the next thing from Sand Hill Road in Silicon Valley. And Apple's basically, when it's cutting the prices, I look at it as it's building the moat. And it's got an enormous moat with the lower prices and the phenomenal retail service that you get in the stores, which is a very, very differentiated thing in technology.
I wonder, though, about the price. I mean, you know, all said and done, you buy the big iPhone, it's $400 that you put down, plus about $100 a month to pay for the thing. Are you concerned about the consumer?
You're not spending enough time at sports events. Just go look, and not in the $2,000 seats at Yankee Stadium, but up in the stands, and look and see how many fans have the iPhones, and they're multitasking while they're looking at the games. This is an adult toy for middle America. It has phenomenal uses that nobody could have seen when it came out a couple years ago. The uses are expanding every day as it's opened its sources for programming. And there's no telling what this thing's going to do tomorrow or what an improved device is going to do next year.
All right, Larry, on that you are correct. I do not spend enough time at sporting events, and I'll try and improve that. Larry Haverty from GAMCO Investors talking about Apple. He owns the shares.